Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical support and demand area for this market that was already acting as previous support here, preceding all these rejections to the upside. We can see again here it was tested, and just a few months ago the market tested once again this exact same zone, has already started rejecting it to the upside. So in a situation like this, we could expect more potential bullish continuation to be created away from this area, as already happened in the past, every time that the market tested this exact same zone. We can also notice that from a pattern perspective, if we look at the most recent price action, we can notice how we have the creation of these inverted head and shoulders, with the left shoulder here, the head here, and the right shoulder here. And from a pattern standpoint, we must also identify this impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.618 and 0.786 Fibonacci retracements that are lining up exactly with this previous level of support and demand. So from here, there is definitely the possibility of seeing more bullish price action being created away from this area, because this is a confluence of support zone, because we have both the horizontal support and also the Fibonacci levels lining up in the same area of price. And when you have a confluence of support area, that increases the probabilities of seeing institutional longing inside of the zone. And we will be speaking about institutional longing in just a few minutes when we move to the commitment of traders. For now, let's drop down on the weekly time frame and see what we have from a weekly standpoint on this pair. Now here in the weekly, what we must notice is that the structure just shifted from that of a bearish market to now a bullish market. In fact, here we were having the creation of lower lows and lower highs. Now that shifted to the creation of higher highs and higher lows, with this structure level that really stands out, since it was the previous resistance from which all these rejections to the downside have been created, and now the market has broken above the zone and is testing it as support, because previous resistance, once it is broken to the upside, becomes support. So as the market is testing this previous weekly resistance turn support, that increases the probabilities of a potential rejection to the upside away from this level. We can also notice that also here on the weekly, we have an impulse and correction. And after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And also here we can see how we have this confluence of support at this level. And as we said previously, inside of a confluence of support zone, there is an increased probability of getting institutional longing, which again, we will be getting to that in just a few moments. But from a weekly perspective, again, we do have confluence of support. So there is definitely the possibility of seeing some bullish price action being created away from this level. Dropping down on the daily time frame, what do we see? Well, from a daily standpoint, before we go and check what kind of structure the market has been creating here, first, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and let's check the data precisely for the AUD. Now, the first thing that we have to keep in mind is that if we're looking at the data for the AUD, actually already we're looking at AUD USD, because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been massively increased. We went from having minus 107.5k net positions all the way up to minus 49.9k net positions, showing how institutions have been moving back to the bullish side for AUDUSD, decreasing their shorts that went from 145k all the way down to 103k, and increasing their longs that went from 30.5k all the way up to 53.8k. So clearly institutions have been moving back to the bullish side for AUDUSD, therefore making it stronger. Now let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now back to the analysis. Well, from a daily perspective, at the moment, the important structure level is this one here. This zone was acting already as previous supply and resistance here, preceding all this rejection to the downside. Again, kept acting as resistance here and here, and until the market will remain below this resistance, it can easily continue lower. So the only way in which this market would once again become bullish and at that point have the monthly, weekly, and daily time frames all aligned to the same direction with the CO2 data would be if the market manages to break above this level, because only at that point the previous resistance would become support here. And after the break, on the retest of the previous resistance turn support, that is where we would have high probabilities of getting more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this zone. So if we get this break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the CO2 data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the CO2 data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.